Is the audio good? Can everyone hear me now? Okay, great. So let's go over what we discussed a little bit this morning, and then see how the day played out in terms of obviously we had a long liquidation day today, and when you end up with a long liquidation, there's not a lot you can do unless you're simply going to have to make a decision ahead of time, right? Once you decide you're in a trend day, as I've said before, you have three choices. You can decide I'm only going to trade with the trend. You can decide I am going to counter trade the trend the whole way, and if I get my stops, I'll be done for the day. Okay. Or the last one is I don't make that much money on trend days. I just want to sidestep them. I'm not going to be involved at all. Right. The other thing that I go over is time of day. Time of day is important to consistency. And when building spreadsheets, I think I've gone over this with all y'all. You need to center around, right, what time of day is most profitable for you on a consistent basis, right? So let's go in and look at, first of all, the trade plan for the day. Okay, so this morning we identified this 1836 and 3/4 to 1838 3/4 as the top of the balance zone, right? Let me pull this in closer so we can see it. Even without, right, we can see this has just been a very strong area, okay? We opened up, and coming into the day, we had no news to drive the market, which was an issue. We had that one piece out by Goldman Sachs that I mentioned, that I said could weigh on the market, but was unlikely to, right? But in the absence of any other news, it looks like that actually swayed the market, unless there was something that came out that I simply was unaware of at the end of the day, right? And then the last piece that we mentioned was we were going to key off of what was NQ doing during the course of the day, and where would I like to get the trades off, right? And I said if I could get a nice rotation, so coming in this morning, let's blow this up. I said if I could get a nice rotation, meaning a minimum of a 6-point rotation up into the white zone, that I would take the trade near the back of the zone. And we had a limit at 1838 and a quarter, at least I did. So, you can't do much about not getting your limit tagged. You either got to decide, yeah, I'm going to stick with my trades, or I'm going to screw with them every time they get up there, right? The gross majority of the time, when the trades get up there, they get filled. I don't understand why we had such little participation, and maybe a little bit of news would have helped us out today. In the absence of news, there was not a lot. There was not a lot for us to do. So, what I meant by that is there was no overshooting of the zones. In other words, when we get data at 9 o'clock or 8:45 occasionally, there'll be a rush to move in and out of those trades between the algos or the individual traders, and it'll push us just past our target areas or in front of those target areas to get fills. With no news, we got nothing, so it came exactly right to our entry, and everyone else, including me, saw that that was a good entry point, and 173 or so contracts got filled, and not a single one of them was mine or anyone else's. From what I heard, no one got filled at that 1838 and a quarter. The next thing that I stressed out through the course of the day, hold on a second here, was over on NQ. And let me pull up the NQ chart real quick, because this turned out to be the key for the day, right? I had mentioned NQ got above Friday's high, right? And I said the key there was if we got below 35.60, that we would most likely trade to the other end of the range, right? Well, where's the other end of the range? Well, let's go look at the volume profile charts to figure that out. It's a lot easier looking there than it is here. So on NQ, the other end of the range was in two, you could have considered it at two parts, right? One would have been right here, obviously, which we finished, right? And the other part would have been in this area, which I actually did highlight when we went through this morning, and I'll post that recording later today, right? And I said this area right here was important, and that we should find responsive buyers in this area the first time down, right? I simply didn't imagine, I actually stated, I go, it would be a big, big drop for us to get down there today, and we simply didn't make it, right? So this ended up being the top, right? And I was talking about how at the tops, we would often kind of pop above like this or pop below like this and then push back into the zone. Well, that's kind of exactly what we got today, right? We pushed up to the top of the zone, but that 3560, excuse me just one second, guys. I apologize. Hold on a second here. I apologize, guys. So I did mention that we could pop above and then pop below and find responsive sellers. So going back to the chart, right? Look at the pattern that we got. It's not uncommon to pop up out of resistance, right? And then we came right below that 3560 right here. All these people that were betting on the long trade right here were trapped at this point, right? And we pushed all the way down to the 3540. Now, you'll see at 3540 how we started to try to get it to pop back up over and back into the range, and it simply failed, right? Okay, so if you look at all the days and all the charts I have posted, the days where we actually fail are incredibly few, right? The majority of days, when we go look at these trades, right? The majority of these days at each of these locations, what we'll usually find is this. We come into the zone, we'll either find a 2-point rotation here or a 2-point rotation here, 2 to 4 points, right? Same thing here. We'll find these rotations when we push down to the zone like this and then pushed out of it like this and responsive buyers right here. It wasn't till we broke the first hour's low right here where responsive sellers really set in. So then the next question becomes, first of all, in this 1834 zone, right, it already had been well tested, right? We traded up out of it and we traded back into it. It had held. When, on the second time through, we found responsive sellers here. It pushed out almost to 2 points, not quite. And then on the third time, it finally broke, right? This is a pretty good stretch here. 1836 down to 1830. By the time we got down to 1828, I would have taken this trade had I been here. I wasn't here. So let's talk about some of the things that were negative or didn't help this time of day, right? So I've highlighted numerous times, and I just put up basics and following me, right? On where the trades work best, right? The majority of the time, by 11 a.m. Central Time, 12 Eastern, right? I've got my 1 or 2 trades in, and I'm done with the day. I'm profitable. The time span between 11 and 1, I consider it to be the hardest time of the day for 2 reasons. First of all, there's less participation. At 10:30 a.m. Central Time, 11:30 Eastern, London closes. You lose all that money, all that liquidity that goes through the market. You lose that at 10:30 in the morning. Okay, it's gone. The next part is people are gone to lunch. Most of the news has been digested, right? And it's just going to kind of, usually it wallows around. This is a perfect example. Here's 11 a.m., right? We pushed, but then we stopped through 1 o'clock, and the majority of this window right here is chop. Whether you're trading within this period and you're trying to make money where it's choppy, or the zones are just failing in this period of time, it is generally, historically speaking, a harder time of day to trade, and it's generally a time of day. You have no sound. Hold on a second. Can anyone else hear me? Okay. Okay, so generally in this time of day, if you go back and just circle off that 11 to 1 o'clock, right, and look at how many days that trade period of time would have paid you, okay, you will find out that it's a relatively few times, right, that the majority of the money is made prior to that 11 a.m. Then if you look in the afternoon, right, there's a reason why I cut my trade size down in the afternoons, okay? And the reason for that is because the markets can go vertical. Again, we are missing participants. People are tired at the end of the day, right? And there's no news to drive the action for the most part. Okay, it's not that it can't be profitable, it's harder, which is why I focus on that first 3 hours. In today's case, right, the majority of the days when we get to these levels and we have a drive down like this, we normally would expect either a rotation like this, or at least the minimum, a rotation like this before it breaks. So it would look something like this. This pattern here, okay, you might as well print it out while you have it in front of you. Okay, this pattern here, all of this is very typical, right? We came into the zone for the first time, it found responsive buyers, and the second time, it pushed up for 2 points. We came into the white zone, right? It failed, and you got your 2 points, right? This is technically the third time in over here, and it failed. Very common to have that third move fail, right? We came to the top of the zone before. Now, there's always 2 questions. The first question is the zone valid, right? So the first thing I always ask when I have a day like I had today, and because no one likes to lose money. I actually hate losing money. I've just learned to live with it as part of the deal, right? So the first question, do I see a pause in front of the zone? Yes. I got a pause in front of the zone. Do I see when they come back and backside test it that the zone acted as resistance? Yes, I see that right here. I got resistance on the backside test where it failed. Okay, so I know the zone was valid, and I know they flushed it. Occasionally that happens, no big deal. So now we're late in the day, right? The last trade I took came right at the top of the last hour, right? We already broke this zone. We came in here. Was this zone valid? Did it work? I took a trade at 18.13 and 3/4 right in here. Well, 5, 10, 15, 20, 25 minutes, right? The trade held, and we didn't get a response out of it. This is the reason, guys, when I say it's past 25 minutes, that I get concerned with my trades, and I tend to want to bail on them, right? And I should have just taken this trade out break even. I didn't. But if you're going to have this rule, right, if you're going to live with, well, it's 25 minutes, and I'm going to either stick it or I'm not going to stick it, one of the two, you can't get bent out of shape, right, and I had a few traders that actually took this in front of the 1838 level. I think 1837 3/4, a few of them took it there. And then they closed it out for a tick because we spent that same 25 minutes here. And their concern was, right, we were going to bust up to the upside. And they actually had some evidence to support that theory. If we look at that same period of time, right, and if we're keying off NQ, which has served you well in the past, right, past couple weeks, you can't just get lost in one day's trading. Well, we clearly got above the resistance zone here, right? Really, if you took this pattern and you went back and looked on the last 50 trading days, this pattern resolved like this. Okay, so covering that trade, knowing that NQ was holding above prior resistance, was not a terrible idea. Okay, so going back, if you're setting up your trading so that you're in a win-win scenario and you're not having to figure out what you're doing each and every time, right? So you can't come in and go, well, I'm going to not cover this, right, so I can get this, and then come back on the flip side and go, well, we spent 25 minutes here, but I'm going to get upset if I get stopped out. You have to have a method, right, for deciding which trades you're going to stay with and which trades you aren't going to stay with. That's just how the deal works. There's no way around that, right? So in my particular case, right, most of the time at 25 minutes, I'm pretty nervous. I ended up taking this trade out. I forget how much I lost. I lost money on it. It wasn't pretty. I think I lost 2 or 3 points on the trade as a whole, and it was half size, right? So let's discuss the things that we did that were right today so that we can see if this was constructive or unconstructive overall in the bigger picture, right? So in this zone here, I placed my trade at 1838 1/4. That was the high tick of the day, and I didn't get filled. That's all right. I'm going to count that as a win, right? I placed my trade at a point where on most days I'm going to win, and it's going to be hard for my opponents to take my money away from me. Fine. I wasn't here for this, but this was the first, second, third, or maybe even fourth touch, depending on how you count it, right? So this wasn't a valid trade anyways. So did the methodology and the thinking process work? Yes. This kept you out of a loss right here. This trade right here, okay, Question was, do your rules permit you, right? Based on your winning trades, you should be able to go through all your winning trades in this period of the day, okay, and look at them and go, over New York lunch, do I make money or do I lose money? Yes or no? And after you've collected enough data, you might need to try it 30 times. You might need to try it 100 times. You should be able to look back historically, right? I have all my charts printed going all the way back to, I think, April 19th of last year. You should be able to look at that time of day and go and see if a trade was generated in that hour. Did I have, how many of those trades into those zones would have been profitable or unprofitable? And then string that out and look, over a period of time, this would have been my entry, these would have been my losses, these would have been my wins. Is this a profitable time of day for me? Yes or no? Most of the time, I hate this time of day. I prefer not to trade this unless I can see that we're going to fall apart somehow, that I can see that this is going to occur, trend day down, right? Last piece is end of the day. So I came in, we now have had a huge rotation, right? We've come from 1838 and a quarter all the way down to 1820. That is where I entered this trade, right? Which was 1819 and 3/4, I believe, was my entry without looking at my blotter. Okay. We paused 5, 10, 15, 20, 25 minutes in this zone. Okay. I guess I made a mistake there, so I'm going to give myself an X and a check there, okay? Trade location was appropriate. I got 25 minutes to see if that trade was going to work, and it didn't work out, okay? And I could have gotten out there for a very small loss. I should have done that. That was foolish on my part. So I'll put in a win and a loss there. But net from the strategy as a whole, right? This trade just whooshed through you and stopped you. Time of day is all you had going against you at this point, right? But location was good, okay? We're stretched 18 points. If you're sitting there beating yourself up over your trading or that you took a loss there, right? Go back and look at the last, I don't know, it's going to be harder to find 18-point down days, but go look at the last 18 to 20-point down days that you can find. You probably had to go pretty far back because we haven't had them in a long time. I think you have to go back to last summer, okay? And then of those days, the ones that we actually closed at or near the low of the day, go look at those and check off, hey, this usually loses me money or this usually makes me money. I know from my own stats and my own spreadsheets, right, that this trade right here usually makes me money. I should have gotten the heck out of it at 25 minutes, so I'll give myself an X there, but trade location, I'll give myself a check mark. Why is that important for setting myself up, right? So I can do one of two things at this point with my trading methodology, and I've had this opportunity over and over and over again through the years. When you take a loss, you can either decide to go, well, screw it, this doesn't work. Let me go find the next thing that is working, right? And I can distrust, when I come in tomorrow morning, I can distrust these zones and decide this is all over, right? I got to go find a completely different method of trading. Or I can say, this was a long liquidation day. These days happen on occasion, but they're rare. And that I know the majority of the time, the trade placement that I took will give me excellent location and will give me excellent paydays. If there was one modification I could have made on the whole day, right, I would simply say that if you got filled here, right, and you held out past the 25 minutes, you should not have held past the 25 minutes over here. I had some clients that held past the 25 minutes here, right, or only would hold the 25 minutes and took a tick, and then came around here and took a loss, right, because they held past the 25 minutes because they couldn't get their tick. You have to make a decision one way or the other, or you constantly leave the door open to indecision and questions. And the pattern goes like this. If you leave question marks in your trading plan, right, it's going to cause you to think. Thinking and asking questions produces uncertainty. That's why there's a question to begin with. Uncertainty creates fear in trading, and fear generates losses, right? So if you did this today, right, you took a trade here and you did not hold past the 25 minutes. You need to ask yourself why you held past the 25 minutes here when you could have taken a very small or minor loss. And I'll certainly be asking myself that on my own trade plan tonight because I should have gotten out of this trade. Okay, so moving on. Down near the end of the day, exact same scenario. We got to ask ourselves again, because what we want to know at the end of the day is the way that we're trading going to produce me money tomorrow, the following day, and the day after. So First question, did the 25-minute rule stick up? Well, 5, 10, 15, 20, 25. Yes. You could have gotten out of this trade. You could have taken risk here and gotten out of this trade with minimal loss. And I did not do a very good job of that here again as well. The only thing I did do well was cut trade size, right? The next question is, assuming you're trading more than one contract, and if you took these levels here, right, did you cut your trade size? Is it in your trade plan to cut your trade size? If not, can you justify it historically leaving your same trade size on? I'm very heavy in the morning, right? Which makes sense. If I had gotten filled at 1838.25, right, I would have had a gangbusters day. As a matter of fact, I may not have even come back from lunch to see this afternoon because I thought the market was dead. I was really quite shocked when I got here. Okay, so those are the questions you need to ask. The other area where I failed, and I have no problem pointing out my failures whatsoever because I tend to learn a lot from them, okay, was I took a trade on NQ in a horrible location. I assumed because ES was at a zone where it reversed, that NQ would be at a point where it reversed. And as you can see, this is just free fall from hell here. Again, the 25-minute rule almost held up in all these zones. Okay, NQ is much slipperier. There's a reason why I don't push people to trade NQ very hard, and this is the reason why. NQ tends to break its zones much faster than ES does. But if we look at each zone, again, we're asking the same question. Did it provide a resistance point? Well, yes, it did. One resistance point. We didn't take really a pause in front. We had a very small one right there, but the backside definitely provided resistance. The next thing that I haven't talked about is the white zone, right? We're now below, right? We're now below where traders had control to the buy side. Sell side now is in control, right? You can see that we got underneath it and they enforced it on the bottom end. This zone, generally speaking, just for future reference, I'll tell you from my own numbers, this zone is apt to break if it's right underneath the white zone. It was still a valid location, but your upside reversal was very small and you didn't have a good stretch, right? Okay, so we're right into the same topics on NQ as we were on ES. I pointed out this morning, below 35.60, right? That would be a trap trade. We got all these guys trapped. We pushed down. We found no responsive buyers in the white zone. That should have been like a huge alarm going off in your head going, wow, we should have seen something. If you go back and look at the white zone, almost every time, at least in NQ and in ES, NQ at least a 5-point bounce, ES a 2-point bounce. Nothing here, right? We're now below the white zone, and then we're trading below Friday's low. Okay, so it's clear sellers are in control. There's a solid downtrend, and then the other part that you got to keep up with is there was no responsive buying. I pointed that out time and time again. Okay, so let me see if I have anything else to point out in here. Really, I don't. This went right to where I pointed out this morning, where we had to hold that 3,500. And I want to look at the volume profiles one more time. Because if I'm looking at this market and I'm coming into tomorrow going, well, what am I going to do? What's going to happen, right? So first thing when I look at this, right, has any damage occurred yet is what I want to know. So I want to take a look, first of all, at closes. The gross majority of closes in this entire range, this had been the high close right here, this 35.80. This had been, prior to this point, right, the low close, 35.20. We closed below this point right here, and then the gross majority of closes all occurred right in this area right here. So there's two areas I want to watch right out of the gate. This 35.43 to 35.40 area, right? I would expect to find responsive sellers there. You had a lot of buying going on here, and if they can get it back up here, you would think they'd want to come back in and puke it if we get it back. Now, that doesn't mean we can't come, right? We've seen long liquidation days, right, where they come right back up and pushed right back into the zone, okay? It doesn't eliminate the odds that it doesn't eliminate the chance that we'll come back up. Secondly, clearly 3,500, right, was an important area. Okay, it'll be interesting if we get tested there. We'll want to see it hold above. If we hold above, right, all we've accomplished is if we hold above this 3,500 is we've come back and tested what was the top part of the prior balance area, which was basically right here to 34.40, right? This is what we did before. We've broken out. Now we're just kind of doing this, right? There's no reason, there's nothing that says we can't come right back to the top of this balance area on NQ. Doesn't have to. How would we know if things are going to go wrong, right? Well, first we have that we need to see it above 35.20, and then we need to see it above 35.40, right? If we don't get that, possible hints that things have changed. Number two, if we get below 3,500, right? You saw how it stalled right below 3,500 and pushed back up. If we get back up or we gap below, let's say we gap down to 34.80 and we're unable to push back above 3,500, you know that this bottom end of this range right down here, the 34.40, comes into play. Below 34.40 and you open it all the way up, all the way down to 33.60. I'm not predicting a crash. I'm not saying the market's going to wipe out. I'm not saying anything like that. All I'm saying is that these are the levels and that I can see clearly that there's support levels built in here. This stands out in particular, 3,400, right? Stands out. And this area right below it, approximately 33.90, stands out. Also, this area right here, this 34.70, stands out as the next area of support. Okay, so I'll look here. All of these areas I'll look to find responsive buyers, right? The next question is on long liquidations. Let's go and look over here at ES real quick and see what the story's been. But before we do that, we can see here we had a long liquidation day right to the bottom, right? What do? We had a few days where we pushed lower a little bit, right? And this is one of those days where we had that loop that pushed back up. But you can see on the following days, if we want to have a model of what might happen, right? After long liquidation, this is what happened the next couple of days. We went sideways and based. So the thing I want to know after that is, have we had other examples going back? So I'm going to do exactly what all of y'all should be doing tonight. I'm going to go back and look, right? So I want to refresh my memory as to what happens on days where we have long liquidation. Well, this is the next example that I can find back here in November, right? This was our long liquidation day, right? And this was even worse. Look at this. This was the bottom of a tight range right here. Okay, you can see that. And then the bottom below that really was this close, and then we had this gap, very small gap right here. Okay, at this 3,300 level. I don't know if y'all can see that. Okay, so this was long liquidation. Everyone was like, oh, this is going to break. It's all over. If you look the next day, we tested barely underneath the prior day's low, right? And we pushed all the way back up into the range, traded sideways for 2 days. On the third day, we opened, tried to test back down, and then pushed all the way up, okay? So this is a perfect example right here of a long liquidation day that was a one-day event. So I don't want to come in going, oh my God, it's all bearish, it's all over, because all you're going to see on the stream tonight is how bearish everything was, right? I want to go back and see if that's true for a second time. And again, this is exactly how I do my homework, guys, okay, when I'm trying to figure out what's going on. Now, this case was a little bit different, right? This is another long liquidation that we had. Again, we're going all the way back into October here. We can see that this was preceded, right, by a series of days where we closed on the low. The next day we were unable to push up, which, gosh, I wish today had looked like this, where we were unable to push up and just rolled over, right? We were unable to push up, and then we actually closed below what was the lowest series of closes, right? You see that? We closed right on it. Okay, so look at the next day. We came in and we pushed down into the prior area balance, right? Actually pretty good. Close to this 3,100. And I guess we would have said we had support coming in here. Well, heck, I would have said support was all the way down here at 30.80. We didn't get anywhere close to it, right? We pushed in. We opened. We tried to push above. It looks like I'd have to go back and look at this specific day, right? But we closed lower, and we closed below this area balance that we had been in, right? But if you look, the very next day we came back in, pushed back up, and continued up. Now, as far as I can tell, there's been no new news to change this scenario going on. Could it be a new environment? Yeah, but I don't want to assume we're going to push to the downside. Now let's go take a look at ES in the same scenario and see if anything has changed over there. Okay, and again, this goes into doing my homework overnight and what I'm going to expect. Okay. And actually on ES, we're going to go back and look, and I'll give you the date, and you can see what it looks like when we've actually broken down. so that you'll have an idea. I'll give you the specific date because it was picture perfect. And okay, so clearly on ES in terms of closes, right? All these closes, this was the lowest prior close right here. Okay, we've obviously closed that gap at 1820. Clearly 1820 is going to be some kind of resistance when we get there, right? All these other closes were above 1830, right, to 1838. Okay, so now we know that we have this area of resistance and this area of resistance. We've closed below. I would suspect that we're going to come back up and try to test this 1820 level at some point, right, to see if we trade back up into the prior balance area, or right. Let's bring this in a little bit closer so we can see this. But the prior top of that balance area was that 1800. I don't know if you remember. And we kept doing these little, that I keep pointing out, these little loop-de-loops here at the bottom. And then the other end of that balance area was approximately this right here, I want to say. So let's call it 1765. And we did that a couple of times where we pushed below that level. Right in here, we push below, close back up, push below, close back up, push below, and definitely close all the way back up at the other side, right? So I know that we have all of this to work through before we're really bearish, and that really no damage has occurred. If you look, we're still poorly auctioned all the way down to this 1804, 1806, and I don't think we got down that low today, if I'm correct. I think 1809. Let's see, low of day. Low of day was 1809.50, and really that 1805 is sitting down there. Hopefully they don't cherry pick that over the night, right? They leave it for us tomorrow to come in and take a long and squeeze them back up. So let's go and look and see what's happened in previous cases where we've had long liquidations, closing near the lows of days, and what happened the following day, right? In particular, where we had long liquidations from the high. Well, I have one example here heading into the Fed, right? Long liquidation, closed at the low. The next 2 days were balance days. Nothing very dramatic going on. And then we finally broke right on the Fed day. We trapped the last sellers. We pushed it all the way through, and we squeezed them all the way up, right? Textbook stuff. So let's go and see if there's any other example of where we had that. Well, here was a day where we opened near the high, right? And we pulled down. We went below the prior day's low, and we closed near the low. The following day was pretty much a balance day. And we had a couple of days where we drifted, we drifted a little lower, but really no damage had occurred. These are the days I'm most interested in right over here. Okay, and what I would do, I hope I'm not boring everyone to tears, and that we're all right here, because I know this is going on a little bit longer than I wanted to, and I'll wrap it up in the next 10 minutes. I'll be done at 4 o'clock because I have a client right after that. Okay, so looking at these days here, right? We clearly have a clearly defined high end of the range. And if you look, this day we opened, we tried to break out. The top end of the range looks a lot like NQ, right? And we traveled all the way back to the bottom of the range, which I would have said was right about here. Okay, there was two, just like we have right now. There's this one, and then there's one below it. So we had a long liquidation. What did we do the next day? We came back up and traded right back to the top of the zone. It was just a head fake. Okay, so let's go a little further back and see if we have something different to look at or to give us an idea of what happened. And you're going to see it here in a second. Okay, so let's look at this breakdown and how it occurred. Okay, we had 3 distinctive trading levels in here. This is going back to October. Okay, and this is how those patterns worked. And you should go back and look at how the daily patterns worked intraday on a 5-minute chart is where I'd go look. We opened this day and closed near the low. Following day, we had a small gap down. We filled the gap, and we closed near the low. But if you look, we went into balance at the bottom of this range for 4 days. The following day, right, before we started this down move, if you look, we gapped down, right? And then we came back and we closed just below being back into this range. Then the next day, if you look, right, we gapped down. We're actually starting in a downtrend here, right? You can see that going right across right here. But look how hard the short was on each occasion, right? If you try to chase it down. We gapped lower, pushed a bit lower, and then pushed up, right? Since we opened here, we had to push all the way up and we closed in the middle. Here, we opened flat and pushed up again. Where do we push up? Not only that, we closed back into the range, right? The next day we gapped down again and we pushed up again. Each of these days, even though the market is trending down and we're getting lower highs, the push-ups on most days were pretty vicious. There was only one case where, one case where we opened at the high and pushed lower. All these other days we opened lower and pushed up. This was the one day where we pushed down from the open, right? This day we opened low, pushed high. Open low, right? If we opened here, we had to push up and then we closed down near the lows, right? This day we opened near the high. There was no gap down. And then we rolled over to the downside. Next day we opened flat, pushed down, and pushed back up. Why am I going through that so tediously, right? Well, it's the most recent place where we actually have anything that resembles a downtrend, right? And I can show you on the vast majority of these days, right? If you tried to push your short on each one of these days, for the most part, on the majority of the days, you got your ass kicked, okay? Like, in other words, for people who said, well, I knew it was short for today, right? Someone who shorted here. So take it how that translates into people I talk to, right? I want to show you what that looks like on paper and what I've seen in real world experiences, right? So what happens to a trader? We have Trader X. Trader X comes in and he figured out somehow that on this particular day, this high open was the high and he stuck his short all the way down and closed near the low of the day. He picked up roughly 10, where we opened 17, 12, 10. He picked up almost 16 or 17 points, right? He is celebrating. That guy will spend the next couple of days and weeks trying to push this trade to the downside, right? And every time he gets an open, he's going to push it down, and he may make money on some days, right? But he's going to give a lot of it back in a lot smaller ranges. And if he's not precise with his entries, he's going to get smoked. Again, he thinks he's nailed it here on the open, but look how far we push up. It's unlikely that he held his short all the way through this, right? On this one, he did get to the low of the day. On this one, he got smoked by the time we got to the close. The close was up, right? On this one, if he held it like he did today, right? And most traders can't make the distinction between when they nail it here and are going to have a market that closes on the low and all these other days, right? He'd have to have something that would tell him that he wasn't going to have these push-ups. Again, we open, right? If he's chasing, he's smoked. Long was the easy trade on this day. Same thing here. Long was the easy trade on this day. Long was the easier trade on this day, okay? Here again, we opened and we traded down towards the low and then we rebounded back. So if you look at these days, he made money here, right? Maybe made money here, then certainly loss, 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 made money here, okay? And then on the very next day, we came in and opened up, right? Slightly up. If he followed that same strategy, if I'm going to short a small gap up, he got his ass kicked there too, okay? So what this tells me is the majority of the days, even on down days, the solution I'm going to follow is going to be this pattern, right? I'm going to look for the market to push up, push down, find responsive buyers, and either push back up to the bottom third, half, or all the way up, okay? I'm not going to get overly bearish in these situations. If I open, right, I'm going to follow my rules of engagement. What are my rules of engagement? So the first thing I'm going to go do is look, by the way, when we finally broke down from here, right, and everyone was waiting for it, we finally gapped out of balance right here. But look where we came right into. This was the next area of support right here, and we held it perfectly, okay? So one day of long liquidation, okay, does not destroy the markets at all, okay? And so I just want to keep a balanced look on that when I'm coming in. And I know that I probably get a little too tedious on this, but this is exactly the process I go through in the evening. Why do I do that? Because I don't want to go into an area, I don't want to go into a period of time where I'm getting overly beat down with, where I'm trying to get overly beat down with excitement that the market's going to roll over to the downside, right? I can't find any examples. The only place I find a really good example of where we finally gave up the ghost, right, was where we pushed up and down here. That would have provided a good trade. We probably would have made plenty of money there. Why? Beautiful rotation up. Here, we had long liquidation. Then the next day, the exact same pattern. Opened up and flip back to the middle the next day. Then we had this gap, right? And so the question always becomes, and I always ask people who say, well, yeah, well, I got the short here and I made it all the way down, right? So this was a slight gap up from the prior day, right? So my question to them is always the same. How the heck did you know that on this gap up, right, or on this gap up, right, when they short this gap and it comes all the way down, how did you know that this gap was going to fail and that this gap was going to run? And the answer to that question is they don't. They get lucky is how they do it. How do we combat that so that we don't get caught, right? Well, we have a couple of things. First of all, we know Globex low, Globex high, right? Then we'll change colors. We'll make this representation of, let's say this is gap fill, right? So let's say we come in tomorrow, this is closed, right? So hypothetically, we come in tomorrow morning and market opens at Globex high, right? So our first test is going to be, do we get half gap? Do we get full gap? If we don't get either of those two things, right, that's a sign of strength. And so we're going to be cautious on the shorts. The next thing is, what is rotation size when we're coming into this trade? Okay, so if we open like this, we gap up, and we can't get down to half gap, and we come up and we clear overnight highs, right? We're not going to be overly eager to short without a good stretch, right? So once we're over overnight highs, right, what's my next question once I'm there? Once I'm on overnight highs, can I trade below overnight highs? Do I have traders trapped above, right? Or the inverse, right? Let's take a look at the, and if I get them trapped above, right, what's likely to happen? Travel to the other end of the range. Okay, so what's the other scenario that could play through here? Oh, heck, I'll just do it all over again. Okay, we have Globex low, Globex high, and we'll make it white this time. Prior day's gap. We come in and let's say we gap down. We gap down to Globex lows, right? So first question, half gap and gap fill is the first question. If we trade lower, right, do we do this U-turn? First question is, can we get above, right, Globex lows before we broke? Number one. If we can get above here, that sets up trap trade, right? Once we get to the trap trade, can we get to half gap? First test. If we can do that, can we get to full gap, right? If we hold both of those and we don't trade below, it's very likely that we'll trade up to Globex highs. And if we can get above Globex highs, then you have a strong day up. This methodology of measuring and looking is what takes out the anxiety of figuring out, are we having a trend day up or trend day down? I'll give you a perfect example of that right here, right? So we're gonna have to make up the data, right? But we can take any of these days and apply that exact same test to help us figure things out. Prior day's close, prior day's low, right? We opened above prior day's close, right? So let's assume Globex high is somewhere up here, okay? We opened up, we came down, we tested, I don't know if we went up or down, you'd actually have to go look at the individual day itself, right? But in pretend line, right? We know that we opened here, we came down and we tested prior day's close, we got gap fill, then we came down and tested prior day's lows, and we broke below prior day's lows, right? So notice that everyone that chased down here got totally screwed, right? Why? Because we pushed all the way back up above 1640, okay? Now let's take another scenario. We pushed below, we came all the way back up to 1640 early in the day, right? It had been very easy to see us trade all the way up to 1650, right? And at some point we did, right? So we have all of these things coming, right? And then what's the last piece that we needed to see happen? We would have needed to trade above the prior day's high to know buyers are really in control. And that's what happened the next day. If we apply the exact same test, right? Prior day's closed, next day's open, we can assume that Globex high is somewhere in this area and Globex low is probably somewhere in here, right? The gap probably didn't occur overnight, okay? So we probably drifted up like this overnight. We came in, this is prior day's open and prior day's high. If we opened right here, right, and we pushed above prior day's high, at that point, you know you need a good rotation before you are looking at taking a short. And if you look the next area of balance, right, we can see it was that 1860 level. That 1860 level is about where we closed. So I hope that explained I'm going to wrap it up now. I think that kind of explained what I'm looking at and what happened today. Does anyone have any questions really quickly? I have just a few more minutes before I have to jump off. I obviously can't hear you, so you have to type in the questions. You're very welcome, JD. The volatility or the volume are you referring to? Can you clarify if you're talking? CD is asking, saying the the volume was high. I don't pay that much attention to volume because we went up on a lot of this on low volume too. It doesn't factor in for me, other than to say very low volume days are obviously choppy, but a trade tends to work day in, day out, whether we have high volume or low volume. The high volume, the higher the volume, the better, because it tends to get us more responsive sellers, right? We get the moves quicker. So from that standpoint, but what about the SYC level of 1800? Are you talking on NQ? Obviously. I don't see what you're talking about. Hold on one second. Let me look. Oh, excuse me. You're talking about ES. Wow, I'm tired. Excuse me. Oh, you're just talking about the round number of 1800? Is that what you're asking me? Oh, okay. It's really this. I think everyone's really keen off of this 1805 right here, somewhere in here, 1804 to 1806. That's where I'll be taking my first shot. But it would be logical, right? If you know that the process that we follow, right? So if you can visualize, right? Everyone knows that we're looking at 1805, 1804 to 1806 as support. Everyone and their brother knows that. So it sure would be pretty logical if we had a pattern that looks something like this, considering the selling, right? So a couple of things. If we gap below, okay, so there's a couple setups. If we gap below, the first test obviously would be that 1800 as a psychological area. But more likely that 1806, right? If we get below it, will then become resistance at that point, and would actually set up a pretty good short trade to the downside. If we open here, right, and we trade down, it would make sense that we got responsive buyers the first time at 1806, and then we fell through that and got below 1800, scared everyone out, and then close back above. The minute we close back above whatever that Globex low is, you're going to have people from below trapped, and it ought to push us back eventually back for a retest of this 1820. Really, this area right here should get tested. So what is that, 1825 or 1826? Somewhere in that range. That should get tested before we reject. The one thing to stay cautious of is not to get overly excited that we're going to roll down or straight down to the downside. I haven't been in a market yet that hasn't given a trade entry, right? And I can show you example after example where we have, right, long liquidation. Everyone would have said the 1770, right, was key psychological support, right? They want to hold it above. Look at all the closes we had above that point prior. And we closed just below 2 days in a row, right? We gapped above, closed below, gapped above, closed below. But the real tell is, look how big this gap was here, and this was the cool part, right? So check it out. We gapped above, we held, we came down for a test, we held here, and then what was brilliantly orchestrated, obviously on Federal Reserve Day, is look, they pushed it down below right after that news just to scare the crap out of everybody and ran it up. So we'll know more tomorrow morning when we know where they're opening the market as to what the best trade will be, right? But we don't want to chase into the hole. Even on all these downside moves, right, consistently, if you look, even though, yes, we did move down, that every day that we opened, right, when we started these downside moves, there was a push higher, except for one day where we opened flat, right? But all these other days, we would push higher just enough to let you get into a short entry, right? Even here, slight gap ups, right? Even here we pushed up. If you want to be short, that would be the way to look at it. What's a typical day following long liquidation? Balance, Raj. Right? And we can how can we tell whether that's true or not? Well, we can go look, right, at our market, balance market, long liquidation day right here, right? Um, we actually had a long liquidation here. It looks funny, but it was a long liquidation, right? Next days, actually we've been in this balance period. And I think I mentioned, right, and I think I put on the charts Friday maybe in Friday's trade review that I was expecting to move out of balance up or down and to be ready for it. I'll have to go back and look, but I'm pretty sure that I put that down in the trade review from Friday. At the very end of that trade review, I'll go back and look at the very end of the thing, but I'm pretty sure I'm right on that. If we go look at a couple more long liquidation days, right, or even buy liquidation days or short liquidation days, if that's what you want to call it, right? So we had this one example here where it reversed back up, followed by a period of 2 days of balance, right? But most long liquidation days, unfortunately, we don't have a lot of examples to look at, right? But if we go in here, long liquidation day, you would call that right there, long liquidation day, and balance for 4 days in a row after that, right? So what tends to happen on these days is that everyone and their brother sees that, oh, this is a top, we're going down, right? And they rush in trying to short it, and they keep getting their ass kicked as the market rotates back up from the lows, right? And eventually, if you look, people who were shorting in this area, right, eventually you did get a beautiful move down. Go back to this period of time, and we had something driving us, by the way. This was all during that period of time of North Korea. The government wasn't going to be funded, so on and so forth, right? That had us pushed down. And as soon as that came close to getting eradicated, we gapped and went all the way. It was an artificial push down, right? So generally, my observation has been over 20 years of trading that two things occur when a market breaks. They follow two patterns, okay? First comes the period, I'll just draw over this, right? First comes a period like this, right? When we kind of trickle down and nothing bad happens, right? And everyone's wondering, whoa, we're pushing down, what happened? This is assuming there's no news, right? And then what happens is all of a sudden was we end up with something like this over here, right? So we trade sideways, we break down, and then what happens, which is different than this, right, is finally we get this big gap down, right? Everyone goes, holds their breath, and it all, it all falls apart. And then we actually find out the reason why we've been trickling down slowly. And then we get the real break, and it pushes significantly lower. And if you'll go back and look at the NASDAQ falling apart back in 2000, or the breaks back in 2007, and then even some of them through 2009, right, at the bottoms, you'll see that's what it looked like. First, there was speculation that something was wrong, and we were just kind of easing down. But you'll notice when we're in the period where we're just easing down, there's a lot of closes, but not very many of them, right, are at the lows. So I don't have these bars filled in, right, but this is a close near the low, and this is a close near the low, but off of the low nonetheless, right? And they had wide ranges through the course of the day where you could get good rotations, right, even in a down market. So the range here, this is 1860 to 1840. So if I open this up just a bit, okay, so this gives us a good idea. This was a, quote, a down market, right? And if I look at the ranges, this is 1655, right, down to, is that right? I'm always so blind with these things. Hold on a second here. Get my crosshairs tool. So this is 1655, right? The low end of that was just below 1645. Again, this is a 20-point range we had here, right? The following day, but if you'll look, long liquidation, the range, the top of that was approximately 1648. The bottom of that was 1638, back to a 10-point range, right? Right after the day after we have a big long liquidation. Following day, we opened flat, we pushed up. We pushed from 1638 roughly to 1645. Again, that's almost a 6-point rotation up, right? And then we rotated all the way back down to 1630. The point being with all of this is that very few of these days went like this, which is what everyone wants, right? Most of these days either had a pattern like this or a pattern like this, right? A few of them closed And then if you'll look, right, we had this huge gap down, but even on this gap down, right, they obviously tried to push it up before we rolled to the downside. And on each of these days, right, this is a down market. Look how we pushed up before pushing back down. Down, pushed all the way up, pushed down. Here we opened at the high, pushed all the way down, and pushed back up. So what I want to leave y'all with is, for the most part, okay, was a typical following, but balance is the answer to that. Balance on most long liquidation days is what follows. But on most of those days, even following a severe sell-off, right, we got two-way markets. And that's what I want y'all to stay aware of mostly. Don't go abandon or start chasing the trade one way or the other. Let the market still come to you. Take trades when they're down. Markets don't go in one direction. They go two directions. Any other questions? Hey, it's my pleasure. I've got about 3 minutes to grab a cup of tea and get on the phone. So anyways, guys, have a great night. And that's what I'm going to post for the trade review tonight. I hope that helped. Talk to you later, guys.